Trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. Please contact your account representative for more information on these risks. Past performance is not indicative of future results. If you like grain markets and other stuff, you've come to the right place. Welcome to the Grain Markets and Other Stuff podcast. Here's your host, Joe Baklovic.
Hey everybody, welcome back to the Grain Markets and Other Stuff podcast. Thank you for joining me. It is Monday, September 21st. I hope you guys had a nice weekend. Back here looking at some lower markets on Monday morning. Seems like every market in the world's getting beat up here today. The Dow Jones is down 900 points. S&P's down big. Gold's down big. Crude oil, energies, grains, cattle, you name it, everything down. Thank you for coming back. Thank you for listening. Thank you for subscribing. We do have a couple of new outlets that the podcast is being featured on. Of course, I've told you that just about everything is going to be on YouTube now as well, moving forward. And also Amazon has just launched its podcast and music platform, and Grain Markets and Other Stuff is also now available on Amazon. So check out for those two new outlets if you're looking for some different avenues. And of course, still everything is available on the usual Apple and Google and Spotify and just about everywhere else. Given the situation in the markets here, I wanted to do this discussion today. The number one thing to help your hedge account. And there's a few, this is going to be short and sweet today, but there's a few items that I wanted to run through before I lead up to this. First of all, I have said in the past that I believe you can be a very successful grain marketer by just using cash contracts, HTAs, basis contracts, and be successful without really getting involved in futures and options in your own account. And I do very firmly believe that to be the case. I think it's very possible. I've seen it done before. I see customers that I advise do it and be successful doing it that way. It is possible. This conversation or this episode is maybe for those of you who do use a hedge account or are considering using a hedge account in order to offset some of your risk. And when I talk about a hedge account, I'm talking about a futures and options trading account that is held with a broker, a clearing firm. I'm talking about hedge positions. I'm not talking about spec trading or anything along those lines. I'm talking about pure hedge positions is the topic of this conversation. And before I talk about any of this, the one thing that I've got to emphasize to you, and I cannot emphasize enough, is that there is an incredible amount of risk involved in trading futures and options contracts. You need to understand those risks. You need to understand that there is financial risk here. There is risk of loss when trading these contracts. I'm assuming that a lot of you have probably heard that, and if you've traded this stuff for any period of time, you know that. But I can't emphasize to you enough how much risk there is involved in trading these contracts. So you need to understand that risk. You need to fully understand these contracts, these futures contracts, these options contracts, how they work, what is the risk involved. And you need to be able to know how to navigate that. And that's maybe a topic for another day. You need to be able to use these products correctly, and to use them correctly for a hedge account, really what you're doing needs to correspond to the production on your farm, or whether it be grains or livestock. Either way, it doesn't matter. But you should really, as far as I'm concerned, stay away from the spec side of this. I know that's probably easier said than done for some of you, but the way that what I'm focusing on here today in this very brief tip for you is purely for the hedgers out there, those people who are actually using the board to hedge corn production, soybean production, wheat production, cattle production, hog production. This is who that is geared toward. So what is the number one thing you can do to help your hedge account? The number one thing you can do is funding. You need to have your hedge account, your futures account, funded adequately and sufficiently in order to be successful in hedging these products. And I think this is especially relevant right now in, say, the soybean market, where we've seen a rally that was not expected necessarily. Sure, there were people that were bullish. I don't know if there was anybody who was this bullish. Contra-seasonal rally. a rally that if you were hedged on the board would have resulted in a lot of margin calls, a lot of capital being eaten up. So what I advise for my customers when they get started is that they set up a separate line of credit dedicated specifically to their hedge account. And we typically do this using what's called a security agreement. And most of you probably are aware of what a security agreement is. Essentially what the bank does is they'll use your crops or your livestock or whatever you're hedging. They'll use it as collateral, and they'll provide you the loan for your hedge account using your production, your physical commodity as collateral. You shouldn't be using your operating money. You shouldn't be using personal money, because those funds are limited and should be used for other things. Your personal money should be used for personal things. Your operating money should be used to grow the crop. There should really be that separate line of credit through a security agreement set up for this hedge account, so that you are not forced to liquidate positions, so that you have the ability to make the proper decisions and not decisions based on what sort of cash you have available. And I've seen it so often where maybe a customer wants to make a sale on the board, or maybe wants to put together some sort of option strategy, but doesn't do it because they don't have the cash available, because they've been using money from their operating line, or they've been using personal money to fund the hedge account. And whenever that's the case, it seems like bad decisions are made. You don't want to be tied, have your hands tied, or be limited or restricted based on the amount of capital that you have in your hedge account. And if you have that security agreement set up with the bank, which is also tied to the clearing firm, it makes it a lot easier. It provides you with the tools that you need. And in this case, the tool is cash money. It provides you with the cash money necessary to be successful in these hedge positions too. And when I say successful, I don't mean profitable necessarily. I just mean successful in that you're accomplishing your goal, which is to hedge production. Now, does that end up in a profit or a loss in your futures account? I can't tell you that. There will be losses in those instances. If you're doing it correctly, you should make it up on the cash side. If there's profits in your hedge account, you're probably going to end up selling cash grain at a lower price. So I'm not talking about profits and losses in terms of your hedge account specifically. What I'm talking about is just being successful using futures and options as a tool, and being able to stick with those positions, initiate the positions when you want to do it, and not based around when you have the cash available. So I think what you should do, if you're not already set up this way, it's not a complicated process. Just about every ag banker in the country should be able to set up something like this for you. Tell them you're interested in a security agreement. They should know what you're talking about. Money's cheap right now. Interest rates are very low. I have in my career seen certainly a correlation between those who have the available working capital to do a hedge account and those who don't. Those who have the available capital and aren't scared of margin calls, they're not scared of running out of cash to fund these positions. Those customers, based on my experience, have a lot better chance of being successful. They've got a lot better chance of sticking with positions, of making the right decision when opportunities present themselves. And those customers who kind of have their hands tied when it comes to cash oftentimes make decisions based purely on that, and not based on what prices are doing or what may be best for their operation as a whole. So certainly consider that. I can answer questions about these security agreements and separate lines of credit to some degree. It's not my area of expertise. You need to talk to a banker, your ag banker, but it's something that I advise, and it's something that I'd recommend. Having worked with customers on hedge accounts for so many years now, I could tell you I've seen people do it in every way you can imagine, and those that are more often successful, I would say, in terms of, like I said, not necessarily profits and losses in their futures account, but just successful in hedging their production effectively using futures and options. Those people are not restricted by cash or capital. They've usually got some sort of separate line of credit available to them, and I think it can be very, very beneficial. So if you do have questions, about that. Again, I have a working knowledge of it, but who you really want to talk to is your ag banker. So talk to your banker, talk to Farm Credit, talk to whoever you have to talk to have that conversation about having this separate line of credit for your hedge account or this security agreement. And remember, incredible amount of risk here in trading futures and options. I can't emphasize that enough, but if you're involved in farming, if you've done this before, you already know that, you understand it, but I can't emphasize that enough. Thank you for listening. I know this was a short episode, but it was a point that I wanted to get across today. It was a tip that I wanted to get out to you. Hope everyone has a nice remainder of the week. I'll have some other stuff for you later this week, I'm sure. Remember, if you need some help with your grain marketing, as always, go to my website, standardgrain.com, click on Grain Marketing Plan, check out that subscription service, $49 a month. I'll let you know exactly what I'm doing throughout the year. Corn, soybeans, and wheat sales. I go by percentage. It's broken down by crop year. It's tracked in that email every day, which goes out at 6:30 Central Time. Certainly take that out. I believe it'll be worth your while. Have a great day. We'll catch you later.